Today, we're going to be discussing Chapter 6, which is dealing with costing and pricing strategies. And this video will be broken out into 6 parts, so one part on each section. So the first section is dealing with explaining the differences in absorption costing and variable costing. So we'll take a look at that. The first thing I want to read, though, is on page 190. Says making it real to you. Imagine you start a small business selling homemade jewelry online. At first, you have a hard time figuring out how much to charge for your products. You know that you need to cover your costs, but you don't have a clear understanding of what those costs are. You research different costing methods and come across the terms absorption costing and variable costing. You wonder what exactly those terms mean and how the methods differ. What are the advantages and disadvantages of each? How do they impact pricing decisions and profitability? Finally, which method should you use for your small business? In this chapter, we will explore the key differences in between absorption costing and variable costing and the pros and cons of using each method. We will also discuss how these methods impact pricing decisions and how this affects a company's profitability. By the end of the chapter, you'll have a better understanding of these costing methods and how to apply them in your business. So let me go ahead and open up our PowerPoint. So again, this is chapter 6, costing and pricing strategies. All right. So business managers, as we've mentioned, they can use either absorption costing or variable costing in what they're trying to do when they're analyzing costs internally in order to make decisions. So again, this is going to be used for an internal purpose, either absorption costing or variable costing. It's going to be used for an internal purpose for them to make informed decisions. Now, in absorption costing, all manufacturing costs are going to be included in the cost of the product that they're making. These costs are recorded as inventory on the balance sheet, or they would be basically another way of saying that is they would be absorbed into the cost of inventory. The inventory is then expensed in the form of cost of goods sold once the product is sold. And we know that this matches the product cost with the revenues that it helps to generate. And so we know we're in compliance with the generally accepted accounting principles. However, it is difficult to see how costs will change if additional units are produced because only the variable components of the manufacturing costs will increase. The fixed cost would remain the same, and absorption costing doesn't separate the manufacturing costs into those variable and fixed components. And so that's kind of the issue here is with this, it just lumps everything with absorption costing. It's going to lump them all together rather than separating out the fixed and the variable portion. So because of that, that's kind of a drawback to using this. But it does include all of the costs. So this would be accountable with the accepted accounting principles. Remember that the fixed costs aren't going to change as your production goes up. Caveat to that is if it goes up so much that then it requires, maybe a larger building or a larger fixed cost in terms of having to pay for lease on equipment, so on and so forth. But beyond that, then the fixed cost, it would not change, but obviously the variable does. But then this doesn't, it keeps everything the same together, so it makes it harder for us. Now, variable costing then only gives us what the variable manufacturing costs are that are assigned to the product. This is also known, you might see it in other books and other classes called marginal costing. Now, this does not conform with the GAAP because it cannot be used for any formal financial statements. So you can't use variable costing for any formal financial statements, but it's all right to use, for us internally, for internal analysis. And the primary benefit of variable costing is that it helps separate users to separate the variable product costs from the fixed product costs. And that makes it easy to estimate how much the variable manufacturing cost will change when the level of output changes. And so we have these two charts. These are also available for you in your text on page 192 if it's a little bit larger for you to see, as opposed to just looking here on the video or looking at the PowerPoint that's on Canvas for you. But the fundamental difference between absorption costing and variable costing is, as we've mentioned, how fixed overhead is going to be dealt with. And so under absorption costing, fixed manufacturing overhead is going to be included as a part of the product cost. And as we said, so in absorption costing, the fixed portion and the variable portion both together are going to be added. Now, under the variable costing method, only the variable portion is going to be there included. The fixed portion, remember, is going to be treated as a period cost. So it won't be included as part of a product cost. It would just be the fixed part would just be considered part of a period cost. So now in this approach, the fixed manufacturing overhead, it would be just simply considered as part of doing business. And this chart, I'm not going to read it, but it just kind of summarizes to you a little bit of, well, I guess I can. So again, some of the differences. And so again, under absorption costing, we know that the product costs would include both direct materials, direct labor, variable manufacturing overhead, and fixed manufacturing overhead. And absorption costing is all right for us to use in external purposes as well, of course, as internally. Now, variable costing, it uses the product costs that only would include our direct materials, our direct labor, and the variable portion of manufacturing overhead. And so this would only be able to be used for internal purposes. And so just kind of to check our knowledge, which of the following statements is true? Is it that the primary benefit of variable costing is that it helps users to separate the variable product costs from the fixed product costs? Is it B, that the absorption costing matches the product cost with the revenue that it helps to generate? And so absorption costing is in compliance with the generally accepted accounting principles. Is it that variable costing does not conform to generally accepted accounting principles, so it cannot be used to prepare any of the formal financial statements? Or is it D, all of the above? And we know then that it is D, all of the above. All of those statements are true statements. Now, which of the following is not a component in variable costing? Is it A, direct materials? Is it B, direct labor? Is it C, variable manufacturing overhead costs? Or is it the fixed manufacturing overhead costs? And remember, we're speaking of variable. So which would not be considered? And we said it was D, the fixed manufacturing cost is not going to be considered. But we would obviously still consider the direct materials that go in to make the product, the direct labor that goes in to make the product, as well as the variable portion of the manufacturing overhead under the variable costing method. And then true or false. Absorption costing gives the true cost of producing one unit of an item, but it does not allow the managers to easily see how costs will change if extra units are produced. And if we remember from what we said that that is true.